Bitcoin trading around the $85,000 level and the weakness rippling across stocks tied to the industry. MicroStrategy, Coinbase, Robinhood, all closing sharply lower. Joining me now is Owen, Clear Street Managing Director and Senior Analyst. And we were just talking in the break how significant this slide in Bitcoin is. We're now down 9% since the start of the year. What do you attribute this slide to?
Yeah, there are a couple of reasons. So let's go back to October 10th. So there was a massive liquidation in the crypto space. The amount was about $19 billion. And then since then, the liquidity has dropped quite dramatically. If you talk about today's move, I would attribute that to three key reasons. Number one, it's Bank of Japan signaled that there may be interest rate hike this month. The second one is there was a hack on a DeFi platform earlier today. The third one is there was a conversation about the operation choke point 2.0 that could be coming back. So that all aggregate into maybe it kind of magnified the auto deleveraging problem. We saw that back in October 10th.
And it just speaks to how interconnected crypto is, all the different currencies. You have these companies that also are very exposed to crypto struggling today. And I know you're bullish on names like Coinbase and some of those other players, but when you have so much volatility in the actual cryptocurrencies, how does that feed into sentiment versus fundamentals?
Yeah, so first of all, I want to mention that there is still a high correlation between the cryptocurrency and also crypto equity. So that's why I advise investors to look at these on a longer term basis. Like that high correlation just shows that the immaturity of this asset class. But over time, I think that correlation could break. So to me, I would say investors should look at this on a longer term, maybe 3 or 5 or 10 year basis for the investment.
Because fundamentals could essentially go out the window if you have Bitcoin that has a drawdown of 20%.
Correct. To me, that's actually a buying opportunity because I went to many conferences last month, for example, Money 2020, WIPO, and also Chainlink conferences. What I've been hearing is blockchain adoption continues. More and more TradFi companies are getting into this space and launch crypto products. So to me, the fundamentals are actually very strong. But we have to, but we have to play a longer-term game.
You have to be comfortable with the volatility that comes with riding the Bitcoin crypto wave at large. And what about the outflows in Bitcoin ETFs? Should that be a concern for investors? Because we've been hearing more and more that there's increased outflows there.
So that was part of the large liquidation we just talked about on October 10th. And when you see that large liquidation, some investors, if you don't have a longer term view and you start to lose money, they may try to stop loss, right? So one reaction they would take is to just sell the Bitcoin or other tokens. So that could cause a lot of the outflow. But again, if you look at these kind of names on a longer term basis, I would say longer term, the fundamental is still pretty strong.
So longer term fundamentals are so strong. What other catalysts are you looking at that will drive crypto hopefully higher in the future?
So one key catalyst we are looking at is regulatory clarity. So thank God we used to have the government shut down and now government reopen. I think this is a prerequisite for the government, for the Congress to think about or come back to think about the market structure bill. In the House, they call it the Clarity Act. And in the Senate, they're developing their own market structure bill. My expectation is it could come back to the market earlier next year. That could be one key catalyst for the whole industry.
So you've been talking a lot about more crypto adoption, all the catalysts on the horizon. How should an everyday investor be positioned within the crypto market? Is it through direct exposure through some of these ETFs or maybe some of these crypto adjacent names?
Yeah. So I would say, first of all, think about from a capital allocation perspective. Don't just allocate 100% of your capital into crypto space. To me, the better or a good starting point is maybe you allocate 1% or 2% of your overall wealth to the crypto space and try some of these tokens or crypto equities first. And then once you feel more comfortable, you can start increasing that allocation to maybe about 5%.
And it obviously always depends on your risk tolerance and where you're at in your investing journey. One of the big themes in your research is blockchain for cross-border payments. How real is that shift and who could benefit most from something like this?
So based on our estimate, the TAM, it's about $40 trillion. When we talk about the cross-border B2B payment opportunity. So it is a big opportunity. But right now, there are many large companies are kind of occupying this space. But blockchain, because blockchain can make the transaction faster, cheaper, global, and instant. So that's why it has an opportunity to disrupt this space. And again, this is a $40 trillion opportunity. This is huge.
All right, this is huge. We will have you back to see where things are. Hopefully, we've climbed back from some of these losses. But Owen, thank you so much for joining us today. I appreciate it.
Thanks a lot.